And we'll be getting more from Teniola as the day progresses right there in Accra, Ghana. Well, to our first conversation now, yesterday, Nigerian National Bureau of Statistics published Nigeria's Q1 2022 GDP numbers, which shows that the economy grew for the sixth consecutive quarter by 3.1% year-on-year compared to 0.5% year-on-year in the corresponding period of 2021. Despite the myriad of challenges in both the domestic and external economic environment. Well, to make sense of this number, we have Damilare Ashimiyu, Senior Analyst with AfriInverse Research and Consulting, joining us from Ikoyi. Great to have you on the program. Good morning.
Good morning, Larry. Thanks for having me.
Right. So quite impressive numbers in, light of the multiple headwinds in both the domestic and, external environment. How would you rate the GDP performance in the first quarter of 2022?
Well, in as much as Nigeria recorded a growth in Q1, I would say the GDP performance, the year-on-year number of 3.1% growth, is a bit magnified. And, looking at where we're coming from, in Q1 2021, Nigerian economy only grew by a muted 0.5%. So that was a low base and, provided enough basis for a modest improvement in economic activities to make growth look a bit magnified. But if you look at the GDP in terms of in monetary term, the real GDP for Q1 2022 is 17.6 trillion. Compare that to Q1 2021 at 17 trillion, roughly. So it means the level of economic expansion in Q1 this year is just barely about 600 billion above what we had in Q1 2021 when the economy was just coming out of the recession. So what that means, if you analyze that in the context of the population, as of last year, as of Q1 last year, the UN estimated Nigeria's population to be about 211 million. And given the fact that the Nigerian population grew on average by 2.5 million annually. So it means GDP per capita last year in Q1 when the economy grew by 0.5 is just about 80,500 per head. So with this current growth, GDP at 17.6 trillion real term, and population has been assumed to grow by 2.5%, so that will give us about 260 million. It means GDP per capita is just increased barely to 81,300. So if you use the current official exchange rate of 410, GDP per capita now is just 196 naira, relative to 198 naira, relative to 196 last year. So that's just $2 improvement, which is really not significant. And also, if you look at the GDP numbers for Q1, if you compare it with the performance in Q4 2021, the economy actually contracted by a whopping 15% because in Q4 2021, real GDP was 20.7 trillion. And so if we're now having 17.6 trillion, it means over 2.4 trillion have been shaved off of the economy. Yeah, there could be a lot of arguments around the fact that Q4 is always known for a lot of end of the year activities which normally push up economic growth. But the truth remains that the level of moderation in GDP from 20.7 trillion to 17.6 is material. And if we continue at this pace in Q2, when there will be no low base, because last year Q2 the economy grew about 6.1%. So it means if in Q2 between April and June this year, growth is not much stronger than what we had in Q1, we're likely to see another muted growth or possibly a potential contraction in economic activities.
Quite interesting. Well, let's look at the sector performance. Now, the non-oil sector has been the main driver, of the economy since exiting recession in the fourth quarter of 2020. Can we then say the federal government has achieved its goal of fully diversifying the economy away from oil?
So when you talk of diversification, there are two major things you look at. What is the constituents of your export earnings? And what is the level of interrelatedness of the sectors in your economy? In terms of export earnings constituent, as of full year 2021, given MBS data, crude oil export alone accounts for 74% of Nigeria export earnings, followed closely by natural gas export of 9%. So if you add that together, it means crude oil and gas accounts for about 83% of Nigeria export earnings. That shows already that the economy is not diversified. We are very open to external shock that may arise from oil price moving against us. Unfortunately, even though oil price is high now, our production level is a bit dismal. In Q1, our average production was 1.49 million barrels per day, whereas the budgeted amount is 1.88 million barrels per day. Even our quota is 1.77 million barrels per day from OPEC. So it means we are underproducing, and so we are not maximizing the high oil earnings. So what I'm saying in a nutshell is that the fact that the oil sector, non-oil sector is the major driver of the economy. The recent growth does not mean that we are fully diversified, because our export constituency shows that we are fully dependent on oil largely. And also, when you talk of intersectoral relatedness, in a diversified economy, a lot of businesses should not depend on importation to run their operations. But if you randomly pick companies across different sectors in Nigeria, their financials that we have analyzed over and over have shown that on average, we have most Nigerian companies relying on importation to up to extent of 50% of their production level. So in that level, the economy cannot be said to have been diversified. But notwithstanding, it doesn't take away anything from the federal government, especially through the CBN. Their diversification efforts. We've seen a lot of programs, being launched to help drive this. We have the 100 for 100 policy to support companies that will help boost non-oil export. We also recently saw the CBN launching the RTX 200 policy, all in the name of trying to support businesses to boost non-oil export. But currently, we are still very far from diversification compared to countries like South Africa, where export earnings are well balanced. The three largest export earnings for South Africa, we have mineral at about 25% constituent of total export. We have precious metal at about 11% of total, 60% of total export, and vehicle manufacturing and airplane parts account for about 11%. So we have a balanced economy. So if there is a shock on precious metal, the economy will not really feel the effect like Nigeria will feel if there is a shock on oil. So by and large, our diversification journey is still very far, but I think we can get there.
Yeah, we can actually get there. Well, looking at the constituent sectors of the non-oil GDP, the agric and services sectors recorded impressive growth, relative to the first quarter of 2021, while the industries sector contracted 6.8%. Year-on-year. What, in your view, drove the impressive performance of the agric and services sector, and what's responsible for the contraction in industry sector?
Yeah, so for the agric sector, we must commend the effort of the CBN. The CBN has, been doing a lot for the agric sector.
So much interventions there.
Yeah, we have a lot of programs. We've been having Anchor programs since 2017. The CBN has added more. The RC 200 initiative I talked about earlier, as well as the 100 for 100 policy, are also open to players in the agric space. As a matter of fact, the first sort of beneficiary from the 100 for 100 policy early this year, about 29 billion was disbursed by the CBN. We have 13 of them being players in the agric space. So the growth in the agric sector is actually not really surprising, because a lot of effort have been put into that, a lot of initiatives, a lot of stimulating projects from both the federal government and the CBN. And also, between last year and now, the planting season was relatively stable and was slightly favored by the weather condition. Coming out of the pandemic in 2020, initially at the beginning stage of 2021, there were a lot of cases of farmer header crisis. We've seen that reduced in recent time. Hardly would you hear about that. So all these kind of stability as well as supportive measures were the main driver of the agric space, plus the fact that food prices, between last year and now are more than double in most cases. So, GDP is a measure of monetary value of goods and services. So if I'm producing one commodity and it's cost 10 naira now, and last year, and now it's costing 20 naira. So, I mean, my revenue will actually be magnified as well, or not to take away anything from the the effort of the CBN. And for the services sector, it's quite interesting that the services sector continue to support growth largely. This cannot be whisked away from the massive investment, by mostly telco giants. We've seen two of Nigeria telcos giants being granted payment service bank license. A lot of investment went into that to make that happen. And even late last year, two of Nigeria internet providers were also granted a license to drive 5G facilities. And we've also seen a lot of fintechs, investing. So, these are the reasons for the improvement we're seeing in the services sector, which is led by both the ICT and financial and insurance, because the financial and insurance sector grew the most in Q1 by a whopping 23%. So the continued investment by private players, and that shows what private player can do if given the enable environment in finance and insurance as well as ICT, is the joker behind the growth in the services sector. And for the industry sector, the major drag on the industry sector is just the crude petroleum and gas sub-activity sector, which invariably account for more than 40% of that sector. So given the fact that Nigeria investment in oil in Nigeria has reduced, as can be reflected in our oil rig count, which has dropped from 16 in 2019 to just 8, and also our production level is dismal, even at a time that oil is high. So the crude petroleum and natural gas subsector under the industry sector contracted by 26%. So that was strong enough to drag the services sector lower, because the subsector was like the largest component in that segment. But if you disaggregate the industry sector further, you see that manufacturing also grew by 5%, which is decent, though despite all the exchange rate crisis.
Right, and there have been some key policy developments over the past year, that the market have been watching to measure their impact on, specific sectors. For instance, the NINSIM linkage exercise, introduction of some new taxes. How have these policies, affected, the relevant sectors so far?
Well, let me speak to the NIN policy first. The only good thing is that players in that space have developed a very thick skin for different challenges. But the truth needs to be said, as we rightly flagged in our recently released telecommunication sector report titled "A Bright Spot Amid Mirror Waters." Telecom subscriber base declined by 4.4%, which is about 9.1 million, just due to this NIN SIM linkage. And it also affects the revenue of industry players. But the good thing that worked for them, that made all the listed telecom industry players to post double-digit revenue and profitability taxes, that they were able to improve their cost management, and also their revenue from data jumped up significantly. So that was able to cover up for the loss of subscriber base. And the same thing for the sugar tax in the brewery industry. Industry players had to dig deep to be able to cut down their cost. But these policies actually affected cost line of this player, but due to their ingenuity as well as their resilience, we're able to still deliver stronger numbers. And that's why we see ICT growing double digit again, going back to the era what we used to see before 2021 at 12%.
Quite interesting. Thank you for breaking down those numbers, Damilare. But before I let you go, it's the first quarter. We still have the whole of 2022 to go. What's your outlook for 2022, given these, Q1 numbers?
Well, earlier in the year, when we released our outlook for the year, which we titled "A Mix of Boom and Gloom," we knew a lot of things are going to be happening this year to shape the dynamics. Although one of the things we didn't saw coming that actually has happened is the Ukraine-Russia tension or war, which is affecting and disrupting global supply chain. But by and large, we believe that if every policy is well put in place, if the CBN and the federal government marshal their policy appropriately, the economy should be able to deliver a modest 2.9% GDP this year, which will be quite, very close to the 3% recorded last year. Okay. So by and large, we feel that outlook is still not so gloomy. But again, we need to do our home part of it.
Not so gloomy.
Yeah, to deliver good growth numbers.
All right, Dabilere Ashimi, we'll have to leave it there now. Senior Analyst, AfriInvest Research, thank you for giving us your perspective on these numbers.
Thanks for having me.
All right, so after the break, Commodities Market Update is next. Do stay with us. This is Business Morning.